Hey everyone, it's been a while, welcome back to the channel. I'm Dean, owner of GTA Commercial Brokers. For those of you who are new here, this channel is your go-to as we break down complex real estate and business topics into simple, actionable advice. We've got your back. Today we will discuss the industrial insights for the first half of the year. Time flies, right? We're already halfway through 2025. If you're working in commercial real estate in Canada, whether you're an investor, a landlord, or you're holding down a lease, this guideline is for you. Let's get started. The headlines are grim. Industrial real estate is slowing, demand is down, and empty warehouses are popping up for the first time in years. Rent growth has cooled and investors are getting spooked, convinced the golden age is over. But what if this is just the pause before the next big run? History shows the best opportunities often hide behind bad news. When others panic, smart investors look for bargains. Right now, beneath the fear, powerful forces are gathering. Think of the market like a forest after a fire. It looks damaged, but new growth is coming. High interest rates and uncertainty have cleared out the excess. This cooling off is setting the stage for a new cycle of growth. The core drivers of demand haven't vanished, they're just waiting for the right moment. The current weakness isn't a collapse but a rare window of opportunity. The next 5 years will reward those who look past the headlines and act strategically. Let's dig into the real numbers. The data looks scary. Net absorption is down, vacancy rates are up, and rent growth has slowed to a crawl. Landlords are offering concessions, and it feels like the market has peaked. But here's what the headlines miss. New construction starts have collapsed. Developers can't make the numbers work, and banks aren't lending. The pipeline for new industrial buildings is at its lowest in over a decade. We're seeing a temporary glut from projects started years ago, but after that, there's almost nothing coming. By 2026 and beyond, the supply of new space will be nearly zero. As soon as demand returns, and it will, there will be no new buildings to absorb it. This sets up a powerful imbalance, a brief period of softness, followed by a sharp rebound. The current data is a snapshot of the past, not a forecast of the future. The real story is the coming supply drought. Those who see it now will be ready when the market turns. The opportunity is in what's not being built. Let's look at what's powering the next boom. Here's what's really driving the future. Three forces are quietly setting up the next industrial surge. First, manufacturing is coming back to the US. Reshoring is real, driven by supply chain shocks and global tensions. This means new factories, suppliers, and warehouses are needed here at home. Second, e-commerce and global trade are evolving. Companies want last-mile delivery hubs in every city, and supply chains are shifting to Mexico, Vietnam, and India. This is driving demand for space in key US markets, especially near the southern border. Third, new construction has frozen. With banks pulling back and costs high, almost no new projects are breaking ground. This guarantees a future supply crunch. When demand returns, vacant space will vanish fast and rents will spike. These aren't short-term trends, they're fundamental shifts. By 2026, the market will look completely different. The smart money is moving now. There are risks. Stagflation is the biggest. Slow growth and rising costs squeeze everyone. For tenants, it means higher rents even if business is flat. Flexibility is key. Avoid long, expensive leases and keep cash reserves. For investors, industrial real estate can hedge inflation, but weak demand can make leasing tough. Focus on top-tier locations that are essential to supply chains. Avoid risky secondary markets. Stagflation doesn't erase the coming supply crunch. It may even make prime locations more valuable. Be defensive and smart. Tenants need flexibility. Investors need quality. Prepare now to navigate uncertainty and seize the opportunity ahead. The fog will lift, and those who planned will win. Let's get practical about what to do next. Here's your checklist. Now is the time to act, not wait. For tenants, review your lease, start renewal talks early, and negotiate for flexibility. Shorter terms, expansion rights, and rent caps. If you need more space, now's the time to find it while options are plentiful. Choose locations critical to your supply chain. For investors, line up your capital and focus on prime logistics hubs near big population centers. Look for properties with short-term leases so you can reset rents when the market rebounds. Don't chase cheap deals in weak locations. Be patient, but ready to move fast when the right asset appears. Here's your 2025 checklist. Tenants, start renewals early, negotiate flexibility, secure expansion space, keep cash on hand. Investors, have capital ready, target prime locations, seek near-term lease expirations, act decisively. The winners will be those who prepare now. The window is open, but it won't last. Let's wrap up with the big picture. Seize the moment. Industrial real estate in 2025 is a story of hidden opportunity. The current softness is temporary, a result of old projects, not a permanent decline. The real trend is a looming shortage of new supply. Just as demand drivers are gathering strength, manufacturing is returning, e-commerce is evolving, and warehouses remain essential. This is the ideal entry point for bold tenants and investors. By 2026, the market will tighten fast, and those who wait will pay higher prices. Like and share this video to any investors you know. Let's help each other through this tough economic times. Act now. Reach out to me and my team today. We specialize in finding the right spaces for your venture. Let's make sure your business works for you, not against you. The biggest fortunes are made by those who invest when others are fearful. Thanks for tuning in. I'll be back next week with more updates, straight from the commercial real estate front lines.